Hey, this is Andrew Kuhn, and you're listening to the Focus Compounding Podcast, the podcast where Geoff and I talk about actionable stock ideas, timeless investing concepts, and the overall way that we think about investing at Focus Compounding Capital Management. Go to focuscompounding.com and enter in your email to get a free watch list from Geoff every other week. And be sure to check out all of our other work where Geoff writes about stocks at focuscompounding.com. I upload how-to investing videos on YouTube, and we both manage capital for investors at Focus Compounding Capital Management. Thanks for listening, and be sure to subscribe to follow along. Welcome. How's everybody doing? Hope you are doing well. My name is Andrew Kuhn, Focus Compounding Podcast, sitting alongside my co-founder, Mr. Geoff Gannon. Geoff, how's it going today?
It's going great, Andrew. How's it going with you?
It's going great. We hope it's going great for everybody else. We are going to be in New York City, the Big Apple, November 11th through the 15th. If you are a prospective investor and you want to learn a little bit more about what we're doing here at Focus Compounding Capital Management, we are launching a new fund January 1, 2020. Or if you're just interested in the managed accounts in general, reach out to invest@focusedcompounding.com. Again, that's invest@focusedcompounding.com. If you are listening or watching this over on the YouTube side of things, hit the subscribe button, thumbs this video up. And then, of course, if you're on the podcast side, leave us a rating and review. That helps and goes a very long way for us. So in today's video, we are going to be going over a few different stocks that you've written up for the website lately.
Okay.
And this is on the premium side of things. So for people that are interested in, using that, go to focuscompounding.com. And if you use the podcast discount code, it may take some money off of the monthly subscription price.
Right.
But let's go over the first stock the most recent stock that you wrote up for the website. And that is AMRK Precious Metals.
Okay.
And the ticker is AMRK. And you said it's a dealer and lender in physical gold. So give me sort of the rundown on that company.
Yeah, so this is a complicated company. When I say physical gold, I mean the actual gold. So not ETFs and things that own gold, but actual gold that you would be owning yourself, and is kept somewhere. Now, it's not kept with you usually. It's kept in a vault somewhere around the world.
Sure.
But you have ownership of it, yeah.
Okay.
So that's what we're talking about. They do a bunch of different things. The thing that they do that people will be most familiar with listening to this podcast is Goldline, which they acquired recently, a couple of years ago, which is a direct selling thing that sells directly to consumers gold. So gold coins and things like that.
Yeah.
This company deals both in gold bars and gold coins. And the part that interests me was the secured lending business. So if you want to think of it sort of like a trading company that deals in gold, or sort of, how you have market making and activities like that.
Sure.
In stocks, same sort of thing, but in gold. So,
interesting.
If you want to call it, that does investment banking type things in gold and silver. It owns part of a silver mint. It was written up at Value Investors Club, I think, as sort of like a speculative thing, basically saying that the company doesn't make a ton of money right now, but now isn't normal because it makes a lot of money when there's a lot of volatility.
Got it.
Right? Because they're talking about things like market making and things like that, right?
Yeah.
When the spreads are bigger, then you make more money.
Yeah,
right?
sure.
Yeah.
Your initial interest percent, I guess you could say, because this was an initial interest post.
Right.
And typically if you do, more than 50%, that means that you are going to
Probably
revisit it in the future. And this was 20%.
Which is very low for me.
So this was more so like what? You did some work on the company, just going to kind of upload your thoughts and then kind of move on to the next company.
Yeah, I said it could be, the stock trades at I think $11 or something right now. You could see ways it could be worth, I don't know, $14 or $15 or something. But the problem was the business that I liked the best, which was the secured lending business. I thought maybe it makes up a third of the value of the company right now. And so the secured lending thing is basically the equivalent of margin loans for gold, which is just they hold the physical gold, right? This company. And then you can borrow at loan to value ratios up to like 85% or so.
Oh, wow.
But then if it exceeds that amount, meaning that the value of the gold that you have drops below the value of the loan with a like 15% buffer there, then they will close out the position. You'll have a collateral call and they'll close out the position.
Interesting. Is it an overlooked stock?
Yeah, it's an overlooked stock. Yeah.
What's the market cap on it?
It doesn't have a very high market cap. I don't remember the exact amount.
Got it, but definitely an overlooked stock.
Yeah, it's definitely small, and it also doesn't trade. It I believe one thing I did notice is that I think the beta might technically be negative right now, or very close to zero.
Wow.
The one thing I did mention is if people were looking for something that they want to own, like if they would want to own gold or they like volatility in gold, they want to benefit from that, then it was possible that as a speculative thing you would buy it, because it's very uncorrelated to stocks normally. So if you want something like, if someone was saying, well, I want to own gold or something, you might rather own this than own actual gold, you know?
Got it. Yeah, you said, and when you were describing the business, you said the best way I can describe this company is as an investment bank, really a trading house focused on physical precious metals.
Yeah.
And the word physical is very important.
Yeah.
Interesting. So probably not going to revisit it.
Yeah, but so the secured lending business, I think it's really interesting. If they could grow that, that would be exciting. It's never had a loss, which didn't surprise me. That kind of lending should never have a loss. You will have loss if you have like fraud or something, sort of like the salad oil scandal, you know. But otherwise, you're checking it, the prices daily at the close, you know, in terms of what the price of gold is versus what you have. Coins, they do an even lower loan to value ratio, so that would be easy to do. And they charge, I think, close to 10% on that. Now about 6 out of 10 loans that they have, they acquired from someone else. They didn't make the loan. But I still think it's safe. Yeah. So the secured lending part I think is very interesting. The rest of it I think is very complicated. I couldn't estimate how much they would make in volatile times, but you could certainly calculate how much volatility you think gold will have in the future and silver. But this company just doesn't have a long enough operating history to know how much that'll translate into in terms of returns.
Interesting. Alrighty. Next company, everyone's favorite overlooked stock, Daily Journal. Ticker DJCO. Your title was a stock portfolio, some real estate, some dying newspapers, and a growing tech company with minimal disclosures. And this is an overlooked stock. I did a video on it demoing out why it's an overlooked stock. Share turnover is less than 100%. I think it was probably 60 to 70%. Can't remember right now. Beta less than 1. It's a micro cap. I think $300 million,
bigger,
something kind of a little bit over $300 million. Obviously, some people could scoff at the idea that it's an overlooked stock because their board is kind of the dream team, I guess you could say, of what investors would probably like. Charlie Munger is the chairman of the board. Obviously, they have the Daily Journal, which Geoff and I are probably going to go. It's in February.
Okay.
I think it's in February. I thought it was kind of by I remember it's always by Valentine's Day and between Valentine's Day and my birthday. So that's the way I remember
Those are the three big events.
Usually, yeah, I guess, apparently. So, Daily Journal. Why are you interested in this company, or why'd you look it up? Okay. Or write it up, I guess.
Right.
I should
so
say.
like I gave the example with AMRK Precious Metals, the reason for looking that up was I read something that sounded kind of speculative but interesting at Value Investors Club. This one was actually, I was reading a issue of Graham and Doddsville, the Columbia Business School's newsletter. Yeah. And it talked about someone who had given a presentation, which you can find on YouTube.
Yep.
Is it up there? Yeah.
Yeah. I also tweeted out because I don't know. I think it's actually unlisted. So I think if you actually type in, it's not, you're not going to find it. It was through a manual of ideas presentation, but I did tweet that out. So go to @FocusCompounding.
Yeah, I hope they intended that to go out.
I did.
No, I mean, I hope they intended manually.
Well, somebody else tweeted it out. So.
Okay.
But they were anonymous, I guess, so whatever.
But anyway, so it's a presentation there, and you really have to watch that presentation, which is a long one, and so, I don't know, 40 minutes or something. It's pretty long, right?
Yeah.
Something like that. And to understand why someone would be interested in Daily Journal. I wrote it up saying that there's no way, based on the financials, that you can figure it out. And
I think they like that.
That they like that.
I think so.
Yeah. So it is definitely an overlooked stock. The issue that they're doing is they're sort of misaccounting for things, I would say. But technically it's allowed. So what they do is they Journal Technologies, which is part of their company and the part that they seem to be investing the most in, wanting to grow the fastest, doesn't really make money right now. And it does like a case management software and things like that for courthouse for
municipalities
courts,
and
for
stuff
entire
like
courts.
that. Yeah.
But it also does things like you can file to pay your parking tickets and things like that. So it does a lot of different things. So basically software for a municipality, like literally it could be the city of Plano or something. Yeah. And so what they're doing is they're basically charging the expenses now for it, which is what you see in the financial statements. But in terms of revenue, they're saying that because they don't actually get paid, they don't actually invoice the customer in many cases. Some of the revenue they do, but in many cases they won't get paid till till it's gone live, what they've done. And the customer said that they're satisfied after it goes live. So because of the uncertainty of that about being paid, they're saying that like they don't have to book the revenue as they provide the services.
Yeah.
Right. But that's causing a major mismatch because you're doing all this upfront spending on stuff, and then you're actually not saying that you have revenue till the customer starts paying that. And then the customer will be like in probably a 10-year contract, which they'll probably renew.
Yeah, I was going to say, it's all long-term contracts. It's probably an asset-light business. It will be. I mean, that part of the business.
Yeah.
And if you look at, and I guess he kind of outlined it in the presentation, he went through, you know, obviously the whole pitch and everything. And if you sort of read between the lines of what Munger has said publicly about the company at the Daily Journal, I mean, he was saying that their prospects could be even as big as BYD.
Yeah. So, I mean, their prospects could be big. I don't know how big. The presentation goes into a lot of detail on it and doing scuttlebutt. There's no way you can tell from reading the financial statements.
Yeah.
And that's the problem. Reading the annual report and the financial statements, I think it's very misleading how they're accounting for things. And not just misleading, but it's misleading in terms of the basic principle of GAAP accounting, which is that you're matching your expenses and your revenues. And they're not matching them at all. So it's more like you're seeing what you would normally see in like a cash flow statement or something, where they're spending a lot of money up front with the intent to later make a lot of money at high margins, which would be great. Peer would be Tyler Technologies. That's clearly who they compete with. And that's a high
and IC Inc., which you also wrote up for the website.
Yeah. But although I think specifically Tyler Technologies is the one that's more similar, because NIC mostly does portals for the entire state, which is a little bit different. This is more like it's I'd say it's closest to Tyler Technologies. Yeah. But those are the two publicly traded peers. They obviously trade at much higher like EV to EBITDA and stuff than Daily Journal. I liked everything else about Daily Journal. I said their debt is very low in terms of like they use margin loans on their stock portfolio. I was going to say they have a massive portfolio. So in the presentation, I thought it was fascinating. I think it was in the 70s. Rick Uren and Munger, they bought the company for what, $2 million or something. Mm-hmm. So I think it's been like 140 bagger for them. Yeah.
You know, so that's kind of interesting. Mm-hmm. Yeah. And your initial interest level was only 30%. And I'm assuming it's because of the lack of disclosure, everything that's
right. It's just, I think there's no way to figure out this company. And so I think that's the problem you're going to have. It might be, there's no way to track how it's performing after that.
Yeah.
And there are some other concerns. The CEO does everything, has all the top management positions. They don't tell you much about who the managers are who might be running things. So all you see is the board, who are very old and won't be around a long time doing this.
Yeah, so. Peter Kaufman, Rick Uren, Charlie Munger.
Yeah, even the CEO is, I think, a little over 80, had a stroke, was working from home and stuff. They mentioned that. So, yeah, there are risks to that sort of thing. You just won't know because they won't disclose anything.
Sure.
Yeah.
Got it. Next company, Psychomedics, ticker PMD, and your title, a high-quality, low-growth business with a dividend yield over 7% and a third of the business about to disappear.
Yes.
How do you call a high-quality business something that's going to have a third of its growth disappear, a third of its business?
That's a good question. I think it will disappear. They haven't exactly said that. So the thing that's going to disappear, I think, so this is a company that does hair testing for
I couldn't believe the amount of information you knew on testing when it came to like, because you have a lot of drug testing. Yeah. I actually brought this idea to Geoff, and then he started lecturing me on I guess the difference between urine testing and hair testing. I was like, how do you know all this information?
I've looked at companies that did. I've looked at a company that did sweat patch. I looked at a company that did urine testing, and I looked at a company for drugs, obviously, and this company that does hair testing. Hair testing is by far the best. Mm-hmm. So if you really wanted to know what drugs people were taking and how much and for how long, and to really identify drug addicts and things like that, hair testing would be the way to do it.
Yeah, and if you read the chairman and the CEO's investor letters, he says that a lot on how important like hair testing is to the accuracy of drug testing and stuff like that.
Yeah, I don't want to slander the other types of tests.
Of course not.
But the idea that they compare these sorts of tests to each other, like the sweat test and all those things, it's just they're not comparable at all. It's that it's a lot cheaper to do those kinds of tests. And also, I talked a little bit about it. I'm not convinced always that clients really want to identify all the drug users in their
so the clients are employers.
Yeah, usually employers doing screening of existing employees or a lot of times new applicants.
Yeah, and I would agree with that. And when we were actually going over this company, for those, I mean, it is an overlooked stock, $50 million market cap, beta less than 1, and the share turnover was, I think, less than 100. You did 102%. It looks like.
It's for a stock this small, it's actually well known.
Yeah. But generates a ton of free cash flow. Looks very predictable, very interesting.
Right. And definitely a microcap.
Definitely microcap. Yeah, $50 million market cap. When we were talking about this, I actually was saying I interned at a place my senior year of high school, and I don't know why I remember this, but we were speaking with the managers, whatever, and she kind of mentioned that they don't do drug testing at their office because they'd be afraid that everyone would just kind of get fired and get caught. So to your point of what you just said, like sometimes it's like organizations. Do they even want to drug test their employees? I don't know.
Yeah, and an easy way, so to just get into it, an easy way to do that is, what I mean is they may want to know if people are failing a drug test. But the number one reason they give is they want to avoid absenteeism. There's some other things that go further on about dishonesty and things like that. But some of it is urine testing and things like that could easily eliminate people who just can't function. Because to fail the urine test, they would have known they were going to be tested. They just had to abstain for a couple days to pass the test, basically. And they didn't. And so that's probably someone you don't want to employ. But for hair testing, you're not going to catch any drug use in the last 7 days because the hair is going to be below the scalp for that part, right? It starts under the scalp and then grows. But it'll be easy to do it for 90 days. Now, people who have any sort of drug use things are probably going to use within those 90 days, and it's probably going to get captured by that. So they give an example where they did a test in a prison, and they came up with a 0% positive rate using the urine testing. They then did the hair test, and they came up with 7%. Okay, the 0% is obviously wrong. There's no way that in a prison 0% of the people are using drugs. So, and then after that, they were able to implement new rules and things, and they brought it down to 2% or so after that with the hair testing. With the urine testing, they got the same thing, right? And so I think that it's a better test, and they have good technology. As far as I can tell, this company has the best technology in the industry. I think it'll always be much, much smaller than urine testing, though, much smaller. But the part about disappearing is that there was in Brazil, I think they were very serious about actually identifying drug use in terms of people who would otherwise try to pass the test but would use again. And it was because of fatalities on their highways and stuff with truckers. Okay, and the U.S. has a similar program, but they use urine testing. So what happened is they required regular testing of their truck drivers, professional drivers. And the company that they distribute everything through, Psychomedics, because Psychomedics is really just the testing center. It owns a testing center and has technology. It has a testing center in California, a lab, and it has the technology. But it isn't really about it sells to large organizations like a S&P 500 type company or something, but it isn't going out there with a big sales team to sell a lot of other stuff. So they use a distributor in Brazil, and that distributor was majority purchased by a competitor of Psychomedics. Mm-hmm. So, and then they signed a new deal.
Logic would say.
Yeah, and they signed a new deal with them where they're no longer the exclusive distributor. The new deal allows them to use their parent company to distribute. Mm-hmm. To distribute their parent company's test or Psychomedics, both. So it might not happen immediately that it all goes away. Psychomedics said that they're not sure that the competitor is capable of handling everything immediately, but it will go away. Yeah. And so if it does go away, you're talking about an okay price, maybe. Depends. It'll take them a little while to adjust to get cut down expenses so that their free cash flow level only drops by a third instead of dropping a lot more. Right? If your revenue drops by a third, your free cash flow and your earnings and stuff will drop a lot more at first. But if we look at the long-term past, they probably could get back to where they were because that business is totally separate. They had one employee in Brazil. But I think you're talking about maybe after they recover from the Brazil thing, maybe a 6% or so free cash flow yield, 5%. If they grow very, very little, that just doesn't work. So you'll get your dividend. You might get a dividend of 5, 6, 7% because they pay out everything in dividends, and they've paid dividends for 20 some years. Yeah. But that's all you'll get. So it might match the market, and it might be kind of predictable and things like that. But I just don't see, without figuring out where they're going to grow, how it beats that. And I think there's problems with raising the price because of urine testing. That's my biggest concern.
Sure. And if you, value the stock based on Brazil being a 0.
Yeah.
And if it's not, obviously that could add to the return.
Yes,
but I would be conservative and like you did, and
Yeah.
value Brazil being nothing.
Yeah.
Because that makes sense, Next company, Virtu Motors, VTU, and then your title is a UK car dealer, and then you put in quotes, Davis Double Play, and Jeff's latest purchase. So we do own the stock for the managed accounts, and this is a company that Jeff's been following for a while. A lot of people compare it to Cambria.
Yes.
Right? And if
They
you go
like
on,
that better.
you go on Corner Berkshire, there's a lot of
Yeah.
people that are very, feel very strong about the comparison between the two companies.
Yeah.
So why'd you write up? Why do we like it?
So Virtu's UK car dealer. I looked at a bunch of different ones there. Have looked at them for a while. I wrote up Virtu like a year and a half ago or something for the website. I did look at Cambria, and I had said that I would write it up for the website, and then I didn't. I just went straight to Virtu because I didn't have enough to say about it.
Yeah.
Cambria is a better business in terms of its returns on capital and things like that.
It's more of a high. It's growing faster than Virtu, right?
Yeah, it had previously been. Yeah, definitely. And it has like a 40% or so owner in the CEO, whereas Virtu's CEO might own like 2% of the company or something. All the insiders together own single-digit percentages. So the issue with Virtu in the past is they issued stock twice at low levels versus tangible book.
Sure.
So I felt that part of the capital allocation, the fact that they had funded themselves that way, was what destroyed their past shareholder returns. And that actually, if they hadn't done that, their returns would have been good. So their returns look poor versus something like Cambria because of that reason. They might do it again, but it just seemed to me that the CEO especially had changed his beliefs about that sort of thing.
Yeah, it sounds like he had a bit of an epiphany.
Yeah.
You read the book The Outsiders.
Mm-hmm. And and they've been buying back stock. They bought back 2% or so of the company in the first 6 months of the year. They're trading below tangible book, and car dealers don't really go for less than tangible book. Stock's up a bunch though since when I was writing this up, when we were buying, things like that. So that is one thing to be careful about. Some of the things I talked about here was when the stock was around 30 pence, and I think it's risen a bunch since then. Because they came out with earnings that were normal. I don't think the earnings were different than I expected, but the stock had gotten under a P of 6. And I would say this is probably a pretty normal year for earnings. So
it looks like you also gave it an 18% free cash flow yield, roughly. Oh, no, I'm sorry, 8% free cash flow yield. You said, let's assume Virtu's trading for somewhere between 5 and 12 times normalized free cash flow. And then you said that is an 18% or an 8% free cash flow yield.
Yeah, that's correct. It's in between those. Next year it could be more like 18% because they're going to cut back their capex. Yeah, they're not going to have a lot of capex the next 2 years. So they could have very high free cash flow the next couple of years, more like 20% than 10%. But even the most conservative estimates, I'd say they still are generating 10%.
And I believe it was trading below book value as well, correct?
Yeah. Oh, no, it's trading at very deep discount to book.
Yeah.
It's trading at some discount to tangible book. And tangible book is basically the property, the buildings and things like that, and the cars. So, for a car dealer, that's almost everything there. So it's unusual for them to trade below tangible book for long. And the returns on tangible assets, tangible capital that's actually invested in the business at Virtu is good. I looked at it in the last few years, and it's all double digits. The problem is that because they acquire things and pay higher prices for them, that your returns won't be as good as that. So if they do a lot of acquisitions at above tangible book, your returns would be a lot lower.
Sure.
You might get 8 to 10% type returns on capital, whereas they might be getting 12 to 20% or something normally on their actual tangible capital invested in the business. So if they just buy back their own stock, you're getting more like that second kind of returns. Yeah.
Yeah, it was interesting. When we were doing research for this company, I was trying to compile everything that Buffett has ever said about auto dealerships and why they're good businesses. And he claims they're good businesses because you virtually need no capital to run them, right? And a lot of it's kind of financed by your customers, I guess you could say, like with all that. So I thought that was definitely interesting. And I did tweet that out. So if you want to get access to that document.
The Buffett stuff?
Yeah, the Buffett stuff. Definitely check it out. And if you want to get access to all of these posts as well, go to focuscompounding.com. That is it for today. I think we are going to be doing a actual appraisal from A to Z on a stock soon. I think we should do Necker on it because you just also wrote up Necker for the website as well.
All right,
we'll do one of the stocks soon because I know a lot of people have been asking about that. We're trying to do as much practical stuff as possible. So if we even have podcasts where we are doing 5 stocks, giving 5 minutes to 5 stocks, even if there's some dead air or whatever, because we're typing around. We just want to make it as practical as possible. But I want to thank everybody so much for tuning in with Geoff and myself. Again, we are going to be in New York, November 11th through the 15th. Reach out to invest@focuscompounding.com to get on the list. Our week is, like I've been saying, it's been filling up pretty quickly. But definitely reach out, invest@focusedcompounding.com. I want to thank everybody so much for tuning in. Hit that subscribe button, thumbs this video up, leave us a rating review, and we'll see you in the next podcast. Hey, this is Andrew Kuhn, and that was the Focus Compounding Podcast, the podcast where Geoff and I talk about actionable stock ideas, investing concepts, and the overall way that we think about investing at Focus Compounding Capital Management. Go to focuscompounding.com and enter in your email to get a free watch list from Geoff every other week. And be sure to check out all of our other work where Geoff writes about stocks at focuscompounding.com. I upload how-to investing videos on YouTube, and we both manage capital for investors at Focus Compounding Capital Management. Thanks for listening, and be sure to subscribe to follow along.